More market and investment talk lined up for you. We have Anand Shah, who's the head PMS and AIF investments at ICICI Pru AMC, joining in. Anand, always a pleasure speaking with you. With the overnight Fed rate cut that has happened, what's your view on markets in general, the sectors that are likely to do well, and something that you're cautious about post yesterday?
Hi, very good morning. Thanks for having me. So I think what it does, what the rate cut does is actually it removes one overhang in the market in terms of uh, that was one uncertainty because very clearly, if you see, Indian economy has been okayish, but the headwinds were more from, say, China slowdown or a US rate hike, dollar strengthening, and so on and so forth. So I think this, in a way, removes one overhang that what if the dollar, the interest rates in US continues to remain high and the dollar continues to remain strong. So I think that will give little bit of respite. Uh, Nevertheless, the verdict is not yet out. If you see the response of markets post the Fed cut is also not very strong, given that the commentary is not as per the expectation, and to that extent, the subsequent cuts will be more data dependent. Coming back to India, I think India, uh, the the divergence in the various sectors in terms of performance has been very high for last 4 years. We had consumer-facing businesses sort of underperforming, IT underperforming, and the core sectors, manufacturing allied, they were doing extremely well. Now we have reached a point where most of the stocks that were to be discovered, most of the sectors that to be discovered have been sort of researched and discovered. And to that extent, the broad moves in the market would be smaller and smaller. The market cannot really move exceptionally fast and high in a short periods of time, but it will be more stock specific. So what we've been telling our advisors, our investors, and even my own team, that from here on the market, within the sector also will have winners and losers. And within the, obviously, the broader market, there will be more stock picking opportunities, which we'll have to pursue rather than the macro ideas.
Yeah, absolutely. Take that point, Anand. Hi, great to have you with us this morning. From what I recall, across a lot of your strategies, there was a fair amount of exposure to the whole manufacturing theme, right? And now the market seems to be in a mood to kind of churn portfolios, if I could say. There's some buying in banks, obviously interest coming back in IT. So in this environment, within that manufacturing theme, what would you still hold on to, and where would you say the time has come to maybe take some money off the table? If you could explain it in a little more granular way.
No, indeed, I think we've been, overweight banking in general, which has not really played out in last 6 months. It's been only last 1 week, 2 weeks that there is some excitement in banking, but banking remains a pick where the risk reward is fairly favorable because you have a large cap, liquid names with good quality of earnings, more stability, and to that extent, that offers you a good opportunity. Within the manufacturing, the one area which has sort of suffered the most from China's slowdown has been metals. That one area has been under serious stress in terms of profitability. The prices are coming off, and within that, the Indian metal companies have repaired their balance sheets over the last 4 years. They've been more ready for stress on the pricing more than they were in 2020 or before. And to that extent, that metals within the overall manufacturing space is something which can look at bottom up and identify businesses which can withstand this slowdown and then benefit as the metal prices recover. Auto ancillaries remain strong in terms of opportunity, not only within India, but outside India. Many of the auto ancillaries over the last decade have sort of diversified their customer base much better than where they were 10 years back. And to that extent, they also do. But again, as I said, it's more bottom up than the top down.
Yeah, no, take that point. But, on auto ancillaries, just yesterday we were speaking to one of the companies, Suprajit, and discussing what the slowdown in the West means, because a lot of these auto anch players, they have a lot of exposure to the Western markets where sales have been coming off. Does that bother you, and how are you reading the export part of the ancillary play?
Indeed, that has been a pain for last almost 12 to 18 months. Especially the Europe has been not really doing well for many of these guys, and that's been reflected in the numbers, reflected in the stock price. So many of the auto anchors and even the bearing companies which have exposure to Europe have underperformed a lot. So both metals as and auto anchors, as I said, have suffered, but any recovery in US, any stability in Europe can incrementally help them. And as I said, many of these businesses were much more vulnerable to a slowdown, say 4 years back, 5 years back, that the debt levels were high, utilizations are low. Today, many of them have repaired their balance sheet. They can withstand this slowdown, and genuinely, last 18 months, they have withstood this overall slowdown very well compared to what was the situation a decade. So, overall, bottom-up ideas in manufacturing where people have now stronger balance sheets and more diversified customer base
is where you need to be. By the way, I should just point out that the color is changing in the market, especially the mid-cap screen. Look at this. We've got red on mid-cap. So the sense of caution is very much prevalent even here in India. It wasn't just the volatility in the US market. See that changing very, very quickly. Where's the money coming off? Quite a few of the PSU stocks, by the way. RVNL, IRFC, PFC, IOB, REC, Central Bank of India, you get the drift. So PSUs is where the money is coming off. And some of the other names like, the more active names like an IRB, Infra, NIIT, some red on these stocks as well.
Well, there was a mild dip in gold as well overnight, and as a result of which we've seen some of the stocks which have higher exposure to unhedged gold coming off too. So PN Gadgil, for instance, down 5% now, had a stellar listing in the earlier part of the week. And then we have BSE as well, a big mover in yesterday's trading session, now seeing a sharp bout of profit, taking down about 6%. So negating, a large part of yesterday's up move that happened as well. But back to Anand, one of the stocks which has been in focus today among the top gainers is NTPC. The street was expecting value unlocking through its renewable, subsidiary, and that's something that is happening. You hold this stock. I mean, how much of it is in the price right now?
No, so again, stock specific is difficult, but overall, look, last couple of months have been tough, especially with good monsoons. Electricity demand has sort of softened. And to that extent, generally the segment where we were looking forward to a significant deficit of power, and to that extent, we had strong move up move in across the power sector, both generation, distribution, and T&D. We have seen some softening there, but our take is that given that manufacturing is picking up, given even the electricity penetration will go up and the consumption of electricity at the household level will go up, we remain constructive on the power segment as a whole, generation, distribution, as well as T&D.
Okay, Anand, we'll leave it there. Thank you very much for your time. Pleasure speaking with you here on CNBC TV 18 this important morning. So that's essentially what we have as far as the market view is concerned.